All right, so we're going to be talking about two reasons why this FTX crash is going to be killing crypto here. And the number one reason is because of regulation. I'm sure you've been paying attention to everybody that's been discussing this recently. And the number one thing that people are calling for is more laws, more rules, more regulation. They're saying it's happening because of a lack of regulation. So, who is talking about this? Well, number one, Biden's press secretary talked about this within the last couple of days. She said, all of this unfolding right now just proves we need regulation in the crypto space. It's like the Wild West. Chamath Palihapitiya, I'm sorry, I don't know his last name, on his All In podcast with Jason Calacanis and a few others. He was talking about this and he was saying, hey, the whole thing that this has taught everybody is that we need a lot more regulation here. It's been the Wild West. We all thought this was safe, and clearly it wasn't. We're seeing people like Kevin O'Leary, Shark Tank. He's been trying to put himself out there on social media recently, he's been talking about crypto a lot over the last probably 2 years, talking about all the different cryptocurrencies that he's invested in. And all the while he's been pushing for, hey, we need more regulation, and now more than ever. And he's actually one, he had a lot of his money in FTX as well, invested in FTX, and had his money in FTX accounts. So that's the first thing. Number one, that's the result of this, is that a lot of regulation is going to be coming. The reason why we have not seen any regulation in this space up until this point looks like an intentional attempt to let things get really bad. Because when you pump a bunch of money into an economy with low interest rates, print trillions of dollars, cause a bunch of inflation, what happens is all that money looks to find a home. Everybody gets FOMO. Everybody tries to invest in the things that promise the highest returns. You have investors not doing their due diligence. You have the criminals and the fraudsters come out of the woodworks to promise these extremely high, unreasonable returns, and people just eat it up and they start Ponzi schemes. This happens over and over and over again throughout history. When you look at all the big scams, all the big Ponzi schemes, I've talked about this in my last video. It all happens during times of easy credit. These giant pyramids are created. And then when the credit gets pulled back and the money becomes tighter, then they all start to collapse. And so what we're seeing right now is all of that unfolding, all that unraveling and crashing. The result of this is going to be a lot of regulation. Governments are going to step in all around the world and say, hey, we are going to roll out a brand new suite of laws and regulations, and you have to be registered as a security. You have to be registered as a commodity. You have to be registered as they'll come up with some new ones, maybe its own government regulatory agency just for cryptocurrencies, whatever it is. They're going to crush 99.9% of cryptocurrencies because most of these are complete garbage and they won't be able to stand up to the scrutiny of all the new regulations. It's just a fact. There's no utility to them. They're all just trying to be easy ways for the founders to make a quick buck and escape with, investors' money when everything drops that they've been able to unload the bags onto. And so most of these don't have any utility, don't have any reason for existing other than trying to make the people who created them rich. And so they won't stand up to the scrutiny. They won't stand up to the regulation. They will not be able to pass that test. They will utterly fail. And so that's the biggest piece of this, is that most of these are going to fail because of that. The second thing that is going to happen here is that investors are going to become extremely skeptical. And this is actually a good thing. This is what free markets are supposed to do here. Investors are going to be extremely skeptical because everybody's just lost their shirts here. And so the way that free markets work is regarding capital allocation, is that when you allocate your capital, any correct decisions are rewarded by that capital increasing. That's the way it works. You make a good investment, it produces profits for you. Your reward then is the ability to allocate more capital. And so the more correct decisions you make in your life, the more capital you have to allocate. And so the system is self-rewarding. It automatically gives the people who are best at allocating capital correctly, more capital to allocate for the economy. And it does the opposite as well. When you make an incorrect decision with capital allocation and you lose money, now you have less resources available to you. You must, by definition, by nature of not having that capital anymore because you lost it, you have less capital to allocate incorrectly, and you therefore waste less of society's resources. So that's what's supposed to happen here. And unfortunately, a lot of people are getting swept into this and they are losing their money, which means that they are not going to be able to allocate that capital to other losing projects if they are not smart enough or not ethical enough or not they just were didn't do their diligence, the hard work enough to go in and see what some of these things were that they were investing in. Maybe they invested out of whatever the reason was, they made an incorrect decision, and that is the result of it. It also means that investors are going to be much more skeptical about who they trust investing in. And so just because a new coin comes out, just because a new token comes out, and just because the founders say your money is safe, and just because they say we guarantee that we'll give you 6% risk-free, you can pull it out at any time, that means people are probably going to look at that with some question marks saying, well, where's the money coming from? How are you paying everybody 6% at the exact same time? Where's that money coming from? Is it coming from other investors? Because then it's a Ponzi scheme. And so that is the natural result of this. And again, most cryptocurrencies can't stand up to that because they only exist because people haven't had that attitude and have just been throwing money thinking they're going to get rich. That's not happening anymore. So that will kill 99.99% of cryptocurrencies. Now, the two things to do as a result of this have to do with Bitcoin. And exchanges. So number one, Bitcoin. Bitcoin is immune to this. And I know now I've pissed off everybody who loves cryptocurrency and everybody who hates cryptocurrency in the same video with just the slight overlap of people who like Bitcoin only. And I don't even like Bitcoin only for the reason most people do, because most people in that camp say 100% of your money should be in Bitcoin. And I think that's preposterous as well. And so I'm like alone on this island here that Bitcoin should be a part of every person's portfolio, but just a part, and no other cryptocurrency. And the reason for this is because Bitcoin is immune to any regulatory action here. The network size is past the point of being able to be crushed by any regulation, any law, any country. It will still continue to exist. It is past that tipping point. Number one. And number two, that's significant because of how decentralized it is and how secure it is. And so you don't have any surface area of attack. With Ethereum, the government, if they want to, very easily go in and shut it down. The surface area of attack, it's centralized enough where they could do that. Bitcoin is not that way. It is much more decentralized. And so 10 years ago, they absolutely could have shut it down. It wasn't big enough yet, but it's way past that point now. And so it is immune to any regulatory pressure, any laws, any governments trying to shut it down, number one. Number two, Bitcoin is anti-fragile to skepticism, to investor skepticism. This is something I experienced firsthand. I was very skeptical of Bitcoin. I regularly said all the things that all of the famous investors out there who dislike Bitcoin very much say, Bitcoin is gonna go away, but blockchain will survive. Nobody knows which cryptocurrency will win out in the end. It's got to be backed by something for it to be worth anything. A lot of things that are healthy for investors to come at it and say, okay, well, these are the questions about it. And when I approached it and tried to learn about it to see if those objections held any weight, I realized that they didn't. I just didn't understand the technology. And so the more skeptical I was about it caused me to try and learn about it more. And the more I learned about it, the more I realized how wrong I was about certain things and how other things about it were just, way better. So Bitcoin is anti-fragile to skepticism because it invites research and learning, and then it converts that skepticism into understanding and bullishness. And so that is the situation that I went through. That's the position that I'm in. Not a recommendation for any of you other than learn for yourself. So that's first, is that my recommendation to my friends, my family, and myself, if I was in this position telling myself what to do, would be sell literally everything except for Bitcoin. because everything is going down. And Bitcoin will probably go down in price along with most things, but it will survive. And most other things will not survive. They will go to zero. They will stop trading. Their market value there will be no bid on most of these things. Governments will stop almost all of them, replace them with maybe a few stable coins, central bank digital currencies. The regulations will stop most of them from trading. Recently, this was maybe in the last couple of hours. You guys probably know more about this than I do, but just within the last couple of hours, LBRY. It's a blockchain-based, cryptocurrency-based video library in conjunction with Odyssey, ODSY. They had their own token. They came under scrutiny from the SEC, similar to XRP. They just got shut down. They lost their battle because they had their own cryptocurrency there. And so this is what I'm talking about. They lost the battle with the government and they have to shut down. Their surface area of attack is large enough, they're centralized enough where they have no choice. Like the people in control of it will go to jail if they don't shut it down. And most cryptocurrencies are that way. If the government says nobody can use Bitcoin, guess what? Nobody can, they can't go arrest anybody who's still running Bitcoin. It just continues to survive. There's nobody in charge of it. There's no CEO, there's no board. And so that's the main difference there. And so that's advice, recommendation number one to my younger self, to friends, to family, is sell everything, because most things are going to zero and will go no bid and will not trade anymore, except for Bitcoin. Now, the second thing here is get it off exchanges. I don't care whether it's Robinhood, whether it's Coinbase, whether it's FTX, whether it's whatever. Bitcoin does not belong on an exchange. There is a layer of trust there that you cannot get away from if you hold it on an exchange. If you don't self-custody, have it in your own wallet, cold storage wallet, like a Ledger or a Trezor or something like that, is putting your faith and trust in somebody who has an incentive to not be trustworthy. And we've seen this happen. It's unfolding right before our eyes with FTX, that they clearly stated fraudulently, your assets are safe. We will never touch them. We will never do anything with them. You can take them at any time. And it wasn't true. It was fraud. It was a lie. It was criminal behavior. And most people who are losing money right now as a result of this collapse just had that faith and had that trust, and didn't realize that people could actually just lie about that, or that people actually just would. They also didn't realize that, hey, if push comes to shove, I'm not going to be the first one out the door, because the people who got their money out ahead of time, they were the ones that were really close and they were able to get their money out, and everybody else got stuck. I believe it was just the people in the Bahamas, which were insiders and people working for Sam Bankman-Fried. So there's a lot of rumors, a lot of speculation going around right now, but at the end of the day, take your Bitcoin off exchanges. It doesn't belong there. It doesn't matter how trustworthy the exchange is. At the end of the day, it's just not worth it. Might as well just hold it yourself. There's no cost associated with, there's no risk associated, extra risk to hold it yourself. So might as well. There's no downside to it. And so that's the advice that I would give to myself, friends, family, not necessarily you, because I don't know you, don't know your personal situation. But that is the position that I am in right now. And I just don't see any upside in letting somebody else, trusting somebody else to not act in their own self-interest, especially with how crazy things have gotten recently. Now, this isn't the end of the carnage. This is going to continue to unfold, obviously, over the next couple of days, couple of weeks. The legal battle here will go for the next couple of months, couple of years, and we're going to start to see more and more and more regulation. And ultimately, I think the way things are going, it looks like it will all eventually be replaced by a CBDC, a central bank digital currency. And so that it all looks like one big Trojan horse, allowing this whole thing to collapse. Say it's the Wild West. We need the government to step in. Nothing else can serve the place. The people want crypto, but you can't trust the free market to create crypto. So let's get the government to create one of their own for everybody, because everybody wants it. And the people are going to eat it up, unfortunately. So thank you all for joining here. Let me see if there are any questions that popped up here in this chat that I can address real quick. Okay, Fritz said that I'd say a lack of confidence is killing crypto more than anything. So yes, 100%. I mean, that's what I'm talking about here. That the increased risk of regulations shutting coins down, along with, hey, everybody's losing everything right now. Um, that's the lack of confidence there. Those things combined are going to crush most cryptocurrencies. So absolutely. Let's see here. All right, I'm seeing a lot of comments about FUD and clickbait. If you guys must be new to the channel here because I have literally always said never buy any cryptocurrency but Bitcoin. So this is literally just validation of everything that I've said on this channel for years. It's not it's just, hey, I said don't buy anything except Bitcoin, and now everything is collapsing. I mean, that's just validation. So the fact that I'm saying sell everything except Bitcoin, it's like all I'm doing is saying the exact same thing that I've always said here. So there's no FUD here. There's no fear, uncertainty, and doubt. There's no difference. All right, on a scale of 1 to 10, how would you rate the security of the blockchain? Okay, I'm going to answer this question in a way that you probably weren't looking for, but it's because the question looks like we need to kind of backtrack a little bit to what is the blockchain. Um, it depends on the cryptocurrency. When you look at the base layer of the technology, though, the blockchain, what you're really looking at is an Excel spreadsheet. That's what a ledger is. Most ledgers are public ledgers. Most of these cryptocurrencies are public, like Bitcoin. It's a public ledger. Just imagine an Excel spreadsheet. Ledger is just a list, and so you look at a long list, has all the account numbers, and then has how much money is in each account. That's it, and it's public. And so there are millions of users constantly watching this list to see which accounts have how much money. And guess what is also on this list? The transaction history. So any account that has any money in it, all you have to do is you can look at the history and see where that money came from. Every single account it originated from, before that, before that, before that, all the way back to the beginning. The whole list of transactions is there. And because everybody is watching this, if you hack one person's computer, and change it, well, everybody else can see that that happened. And so everybody else knows, hey, that's not a legitimate transaction or a legitimate account. And so you literally have to have enough computing power to be able to hack like, 50%, 51% of all the computers on the network at the exact same time, which, millions. It's like, it's more than any resources available on Earth could do right now. And that's specifically for Bitcoin. For ones that are a lot more centralized, that threshold of attack is much different. Okay, there's a question here, and I'm going to say, for those of you who know, pew pews instead of the addressing, because I don't want this video to get unnecessarily throttled. Do we even have to say that you should buy pew pews at this point? That's a given. And so this goes back to the reason why I say where there's there's no utility in most of these cryptocurrencies that are out there trying to invent new ways of doing the same thing. All they're doing is adding on layers of complexity and inefficiency and cost to things that already exist. So I'm going to get to that question by talking about a gold-backed cryptocurrency real quick. A gold-backed cryptocurrency is useless for two reasons. If the gold is the money, you don't need the cryptocurrency layer. If the cryptocurrency is the money, you don't need the gold backing it. Here's what I mean by that. There are already services that exist where gold will be in storage and you can own that gold that's in storage. And then, if you want to, you can transfer ownership of that gold to somebody else and leave that gold in that storage. That's all gold backed cryptocurrencies do. They've got private vaults. When you buy a token, buy a coin, buy that cryptocurrency, it says that you own some of that gold that's in the vault. There's no difference between that when you break it down to the fundamental way of, you bought something digital that says you own gold in a vault. There's no difference between the gold-backed cryptocurrency and all the existing services out there today, gold vaulting services. Um, the what you do though when you add that crypto layer is you add cost, you add inefficiency, you add a layer of complexity to it that's not needed. And so when you look at two competing products and the value they provide is the same, but one is higher cost and one is less efficient and one is more complex, the other one is way better from every standpoint because they offer the same value. Now let's flip it and say, well, the cryptocurrency is the thing with the value. Then you don't need the gold to back it up if the cryptocurrency is the layer. And so that is self-evident there. So when we look at the utility of most of these cryptocurrencies, it's not there. And if there is any utility there, it's not more than the existing alternative without blockchain technology applied to it. It offers no advantage over what could be done with just regular software application otherwise. So when we look at then, could you say the same thing about Bitcoin? Well, no, because it's just operating as money. And so when you look at it that way and say that's the only thing it's trying to do is be money, then is there any utility in Bitcoin as money compared to the alternative forms of money? And it's like, yes, there are huge advantages. Number one, government can't control it. And so when push comes to shove, you want to have some money in a space that you can make transactions happen outside of the financial institutions, because at the end of the day, financial institutions are controlled by the government. So if you think there's a chance in the future, you may want to buy something that the government doesn't want you to buy, then you're going to need a way to buy it that the government can't control. Very, very simple there. And so I don't care how much you put in Bitcoin, but I think it's probably a good idea for everybody to have at least some, because what are the chances that at some point you might want to buy something that you don't want somebody else to be able to stop you from buying? If the answer to that is yes, that might be a possible future for you, then allocate that much money to that type of money that nobody else can control. And so that's where it comes to pew pews or anything else for that matter that you think people might want to stop you from buying. All right, I'm going to look for one more question here. Okay, do I still recommend Edge Wallet? The short answer is, I mean, the short answer is yes, because I don't know. I haven't heard anything that I don't like about it yet. However, I will say that I haven't looked into it in a while, so I could be completely wrong about that. So definitely do your own research. The software wallet that I like most right now is Exodus, because they've got a good cross platform app for Mac OS and iOS. But the reality is I only use software wallets for a small portion of my Bitcoin. I don't like holding a lot in software wallets. I do for some, just to make it easier if I ever want to move any of it anywhere. There are certain times when you want to move it somewhere, if you want to trade it, if you want to use it to buy something. For the most part, hardware wallets are the way to go. And so I like Ledger. Trezor is another one. I can't remember why. There was some sort of a data leak with Trezor, I believe, a couple of years ago. I don't think any of the cryptocurrency was able to be stolen off the people's wallets, but for whatever reason, I liked Ledger best when I looked into it. I'm sure, there's plenty of others. I think the biggest thing when you're looking at wallets is, for the bulk of it, you're going to want it in cold storage. That means in a device that is not connected to the internet. Ledger is one of the biggest ones. And then for some of it, yeah, absolutely, put it in a wallet like Exodus. I also like having some in Strike, their lightning network, and so you can send and receive like instantly for basically free because it uses lightning, and I love lightning. Um, okay, apparently it was Ledger that had the leak, not Trezor. Um, that's that. Yeah, that's very possible. So if you're saying that's true, then I believe you. All right, and then I'm going to answer that one question from you, Mark. What percent of retailers offer to sell their products for cryptos? Very small. That's not really the point, though. This is gets into Gresham's law. Um, Gresham's law states that bad money drives out good money. So when you look at, back in, 2,000 years ago, when the Romans said, "Hey, we need to," there's fraud going on, there's money laundering going on, there's counterfeiting going on. So everybody has, you got your, 1 ounce gold coins. Everybody has to turn those in because those are being counterfeited. There's crime going on with those. You have to turn them in, and we will give you the equal amount in coins that are newly minted. We're going to put our a new stamp on them. And so, everybody believes the government, says, yeah, they've got our best interest at heart. And then they get the new coins back and realize, oh, they're a little bit smaller. They're not actually 1 ounce. There's less gold in them than the old ones. So at this point, not everybody has turned in their old gold coins, but legally, they purchase the same amount of stuff. Legally, they're worth the same. So you go to buy your rice, you go to buy your wheat, you go to buy your lamb shanks, and it says, 3 coins. Well, which one are you going to use? Are you going to use the old one that has way more gold, or the new one that has less gold? You're going to use the new one. You're going to save the one that has more gold, because legally you can use 3 of either one to purchase those lamb shanks. So you're going to use the one that legally you can use, but is actually worth less. And so this is Gresham's law. It states that bad money drives out good money. You're going to hoard all the good money because it's actually worth more at the end of the day, especially on the black market. And only the bad money will be in circulation. And that's what happens when governments start messing with money and devaluing their money. The stuff that's worth a lot gets driven out of circulation. And so people are going to save their money in gold, save their money in silver, save their money in Bitcoin, save their money in real estate, save their money in physical assets that are worth a lot. And then they're going to spend and go into debt on all the worthless money. And so that's what's happening here. So really, it does not matter whether people are using gold for transactions, silver for transactions, Bitcoin for transactions, any other cryptocurrencies for transactions. What you would expect to see in the decline of a currency is that currency is used more for transactions, not less. When a currency is being devalued, you would expect people to try and spend that even faster. That's what happens because people are trying to get rid of it. And then people are storing up the stuff that's worth more. And so you would not expect to see transaction volume increase for a new form of money displacing an old, worse form of money. It's just not the way it works. Obviously, it's rational to keep the one that's going to be worth more over time and get rid of the one that's worth less over time. The only time that switches is when the currency finally basically dies. There's a small period of time when, like in Lebanon, it's happening right now. There's a small period of time where people want to spend the currency that's collapsing, but people don't want to accept it. And so you're left in this situation where officially people have to keep on accepting it, but the rates will continue to go higher. So they'll demand more and more and more of it. And they'll instantly try and get rid of it for something else that maintains its value better. And then for anything under the table, anything that the government's not watching, they'll only accept the better form of money. So like in Lebanon right now, they're only accepting like euros and dollars when it's under the table, private businesses. But if it's official government stuff, then they are still they're still using the lira, the pound, they call it both there. So that's the answer for whether it's being used for transactions. The answer is very little, and that's exactly what you would expect to see during the decline of a fiat currency. That's all. 30 minutes is enough. Thank you all so much for hanging on here, and I'm going to post this live stream as a video for anybody who jumped on late and didn't get to hear the beginning. Thanks so much. You guys have a good day.